The S&P 500 hit new all-time highs again during Friday's trading session, closing at 6388.64, up 0.4% on the day. And we actually came just within a hair of the big 6400 gamma exposure concentration during Friday's trading session. This was the largest gamma exposure concentration all of the last 2 weeks now, as we've been tracking higher up into these levels above 6300. If you've been watching our videos for the last several weeks, you know that this gamma exposure has been skewed positively higher above the 6300 strike. We did consolidate for a period of time between 6200 and 6300, basically for the early part of July, before finally breaking out over the course of the last week to week and a half. Now the next largest gamma exposure concentration is at this 6500 strike. So I suspect there's going to be some churn between 6400 and 6300 as we've entered into this new level here, heading into this next week. So we could see some consolidation at these levels before a potential breakout to further all-time highs. There's a lot of momentum on the positive side in the market, so we want to defer to positive momentum as long as the data continues pointing to more upside. However, if we zoom out to our daily candlestick chart, and we can see how far above we are above some of the major moving averages that we track, the 50-day EMA is sitting at 60.99, so trading up here at the 6400 level, and we are 300 points above this 50-day EMA, highlighted here on our chart by this red line. So this is pretty stretched in terms of a major moving average, and so we want to be cognizant of the fact that a 3 to 5% pullback could be in the cards at any time. In terms of tactical trading, the market continues offering opportunities during this momentum rally on an intraday basis. On Friday, we posted right after the open at 9:53 a.m. We entered into a position by selling the 63.85, 63.80 put credit spreads at $3.20. If we take a look at the chart at the time, SPX was showing large positive gamma exposure concentration on a 0 DTE basis. This is actually our filter in order to see only 0 DTE contracts for our gamma exposure data. And this was showing us that there was a good chance that price could move towards that 6400 strike during Friday's trading session. This was while the S&P was trading at 63.74. So what did we do? We decided to enter a trade right after the open. Again, this was 20 minutes after the market opened. We placed our stops below the morning low, which was right at the opening candle below 63.70, and we were aiming for a breakout above the previous day's high at 63.80. So not waiting for a move all the way to the 6400 strike, just wanting to capture the momentum attempt up to that level. And so ultimately we closed this trade out for a nice profit, locking in $1,050 profit on our 63.85, 63.80 put credit spreads, closing those out at $2.15. Like we mentioned, momentum continued, getting us all the way up to 63.95 for the high, just a hair within that 6400 gamma exposure level. Turning next to the Qs, we did see a new all-time high on the Qs as well. 566.37, closing up 0.24%. The largest gamma exposure concentration is sitting right here at this 570 strike, and we see gamma exposure growing at higher strikes as well. 575 and 580 look to be the next potential targets. And with the volatility index dipping below the 15 level, this just adds fuel to the fire as vol sellers are in overdrive, pushing volatility even lower, now breaking below this 15 gamma exposure concentration, basically getting all the way back to the lows that we saw earlier in the year back in January. Of course, that is what preceded the big run up in volatility. So we do need to watch the VIX at these levels. We suspect there will be some sort of consolidation between the 15 and 18 level. A breakout above 18 is what we're watching for volatility to reassert itself. But until then, volatility is in compression mode and basically has been for the last 3 straight months. Next, let's take a look at a few names that are on our active watch list. We'll start off with AMD. AMD continues to impress, up 2.68% during Friday's trading session, closing at 166.47. The largest gamma exposure is at the 170 strike. We've been watching GEX between 160 and 170 over the last couple of weeks. And despite a temporary pullback that we saw earlier in the week, AMD continues to find buyers and move higher. We see previous resistance was up here above 170. This is actually our upper dealer cluster zone between the 170 and 173 area. So we do think that AMD's got a little bit more room to go up into this upper dealer cluster zone. Now, remember, this is an area where option dealers are going to be forced to hedge their positions by selling shares of the underlying security as price gets above the 170 strike. So what we're watching for is anything that could overcome that, and that is potentially call buying at these higher strikes at the 175 and the 180 levels. So we do see some volume coming in here. So far, it's been muted. There's some gamma exposure building at these higher strikes, but as of now, we would expect some selling pressure to occur around or above the 170 level. So we're going to continue to monitor this. Any pullback on AMD is going to look like a buying opportunity in our view. So we're watching for a pullback below the 160 strike. That would look like a really good entry point from a risk reward standpoint to re-enter for a swing trade back up to these highs that we saw here at the end of 2024. Next, let's take a look at Robinhood, up 2.86% on Friday, closing back up at 104.85. Hood has had a little bit of a sell-off earlier in the week, retracing back to the 100 GEX level. We do continue to see positive gamma exposure all the way up, really up into the 125, even the 130 zone, with positive gamma exposure building at these higher levels. The trend has really been impressive. Robinhood coming all the way from below the 40 level to well above the 100 strike since the April lows. Hood does have earnings coming up on Wednesday, I believe, and so we're going to wait until the earnings release before we re-enter a position on Hood. But as long as it maintains this 50-day EMA, which is currently rising, that's the red line here on our chart, as long as that 50-day EMA is held as support, and we continue to see positive gamma exposure building at higher strikes, we will use any weakness following earnings to re-enter into a position on Robinhood. And so I'd love to get in, somewhere around the 100 level or below after Wednesday's earnings release. This is more of a swing trade that we'd be looking for continued upside along with market momentum in general. So if all those factors hold true after earnings, we'll be looking for a move potentially up into these higher gamma exposure levels. So that's going to be high up on our watch list. We'll be discussing this in our community Discord. Link in the description below if you guys want to check that out for free. Next, let's take a look at Palantir. Palantir, big update also on Friday, up 2.54%, closing at 158.80. Ultimately, though, Palantir did get up into this 160 level. This was the largest gamma exposure concentration. We talked about this in Thursday night's video. We highlighted this resistance at the 155 strike that looked like it was about to be broken to the upside. That was a potential signal for an entry up into this 160 strike. Unfortunately, the stock barely gave you a chance to enter. You would have to get in right at the open on Friday. It was a big up move in that first 30 minutes, basically going from 155, 156 all the way up to 160. The high of the day ultimately was above this 160 level before we saw the retracement back under 159. So this is another name that we're watching for either some consolidation or a pullback, so we can enter into this uptrend again for a move through the 160 level and potentially 170. And we are running a limited time promotion, $300 off our yearly portfolio manager tier subscription. Use code SUMMER 2025 at checkout. We do have a few spots remaining, but this limited time promotion is ending soon, so definitely take advantage of it while you can. Members get access to our gamma exposure dashboard, our option flow analytics tools, as well as our algorithmic trading strategies. And you can also track our trades in real time through our community Discord as we manage our options portfolio. I'll put links in the description below for all of those so you can check it out when you get a chance. Thanks so much, everybody, for watching. We'll see you guys in the next video.